How much do you spend on rent? 1,000, 2,000, 3,000, whatever the cost, it's too much. I know. Home prices are much higher than the cost of renting, and interest rates are on fire. But let me tell you what you're missing. Homeownership is more than a mortgage payment. Every month you pay towards rent is money that you're setting on fire. And why would you do that? Not by choice, I'm sure. So I'm going to tell you how to get out of it and into a home that you could afford that builds equity instead of sinking your chances at future financial freedom. Before we get into equity, let's get a bird's eye view of how much we're wasting on rent. If your rent is $1,500 a month, how much is that over 5 years? $90,000 to be exact. And congratulations if you didn't get your rent increased in all of that time. But you didn't just waste $90,000, there's more. According to the Freddie Mac Housing Price Index, which tracks home value appreciation, their data from 1990 to 2023, the average U.S. home is expected to appreciate in value by up to 6% annually. This means that if you had purchased a modest home for $150,000 at the end of 2009, based on the index, the value of that home would increase by over 78.9%, equating to a gain of more than $118,350. That is not chump change. Consequently, that same house could now be worth over $268,350, but this is just the index. So if we actually look at homes that are valued at or around $150,000 in 2009, today, those same houses are selling for upwards of $300,000. It's important to note that in addition to the significant appreciation, you would also have been paying down the principal balance through your monthly mortgage payments. So assuming an interest rate of around 6% at the end of 2009 and a minimum payment of under $1,250, you would now owe approximately $100,000 on that mortgage. This means that you would have accumulated over $168,000 in equity, representing the difference between the current market value and the remaining loan balance. Despite my enthusiasm around homeownership, I know that for a lot of you, you still feel that it's impossible. I promise you, there's a way. There's a video in my description where I teach you how to build a sustainable budget to get to your down payment goals. Remember, there are a lot of costs that can come with owning a home, but what's most important is that you get your foot in the door. This doesn't mean that you have to buy the first house that you see, but the bar to reach is lower than you think. So I'm going to give you a little bit on how to get to that down payment. Then be sure to go over and watch the full video. And while you're down there, don't forget to subscribe. How to save for a down payment, not a house. Here are 5 of the best ways to save for a down payment on a house. Number 1, automate your savings. Set up automatic transfers from your checking account to a dedicated savings account each month. This way, you'll be saving consistently without having to remember to do it manually. Number 2, cut unnecessary expenses. Take a close look at your spending habits and identify areas where you can cut back. Reduce or eliminate expenses like dining out, subscription services, or other non-essential purchases and redirect that money towards your down payment fund. Number 3, boost your income. Consider taking on a side hustle or a part-time job, such as Uber, Amazon affiliate programs, or virtual assistant opportunities to supplement your regular income. Dedicate that extra earnings solely to your down payment savings. Remember, you don't have to break your bank doing this. A few extra hours a week can be game-changing for your savings goals. Another way to really boost your income is cost of living allowance raises. So we've had a lot of inflation happen here recently, and this is something that has worked time and time again for a lot of my customers that are on a salary or an hourly rate. Because of the cost of inflation, you can go to your management staff and ask them for a cost of living allowance raise. A lot of cases, your employer already has a cost of living allowance budget that is allocated for employees that need this. However, you will not know unless you ask. Number 4, take advantage of your tax refund and bonuses. When you receive a tax refund, work bonus, or other lump sum payments, resist the temptation to spend them. Instead, allocate a significant portion or all of those funds towards your down payment savings. And number 5, downsize or move in with family or friends. If it's possible, consider downsizing to a smaller rental or temporarily moving in with your family or friends to reduce your living expenses. The money you save on rent or mortgage payments can be redirected towards your down payment funds. And additionally, you can also explore opening high-yield savings accounts, CDs, or dedicated down payment savings accounts to maximize the interest earned on your savings. Consistency and discipline are key when it comes to saving for a down payment, and combining multiple strategies can help you reach your goal faster. Here are some key points to remember. Number one, renting costs more in the long run. It limits control and delays financial benefits. Number two, owning a home offers financial stability, control, and generates wealth over time. And number three, you're not alone. My channel is geared towards providing as much knowledge as possible for people just like you. Be sure to subscribe so that you can stay up to date on when I'm dropping more of that knowledge. Last but not least, you have options. Like I mentioned earlier, there are several types of loans, each with different programs and allowances that make home buying easier. I've got videos on all of these linked in the description, but these types of loans aren't your only options. You can also choose where you get that loan from. Like I said, I'm a mortgage officer, but I work with wholesale lenders. This means I and other wholesale brokers just like me have access to a variety of lenders, and by working with my team, we can find one that wants to work with you. Anyway, that's the end of the video. Thank you all for watching. Please leave a like on this video, subscribe, and if there's anything I went over today that you still have questions about, let me know in the comments. I have resources and a link to my website in the description, and you can get in contact with me down there as well. Thank you all for watching. I'm David Zai Mortgage Guy, and I'm out.